Right, ladies and gentlemen, because we haven't quite finished with question 3 last week, we decided to call this class number 2B. So we'll rename last week Monday's class number 2A, because as you know, we've already had class number 3 last week, Thursday. But perhaps we can just pause a few seconds there. Are there any questions so far from your side, students, with regards to this question, or can we continue? Right, looks like we can continue. Okay, so just to get a link to where we finished last week with this question, so let's just have a look at what we've done so far. Here we are displaying the face of our statement of cash flows. This is what we must still draw up. But we have completed the note, so let's just see what we did. While completing the note, we started with a figure profit before tax, which we got from the face of our statement of comprehensive income. And then we adjusted for what? We adjusted for any kind of expense or any kind of income item that does not form part of your operations, right? So we would have taken out any income or expense items that may relate to, for instance, what we refer to sometimes as the other so-called other operating activities, not part of the operations, and any income or expense items that would have related to our investing activities, right? So that would have provided us with a profit. We haven't converted it to a cash flow yet, but this is now purely a profit dealing with operations because we've taken everything out that does not deal with operations, right? And then in our second kind of adjustment here, we would have looked at the changes in working capital. We defined last week what we mean by working capital. So those would be your current assets and current liabilities that have a direct bearing on your operations. In other words, your wheelings and dealings with your customers and your wheelings and dealings with your suppliers and employees. That provided us with this total year cash generated from operations. We said that that should not be called operating activities because there are still the 5 other possible operating activities that we haven't taken into account yet. And that figure then, the cash generated from operations, we transfer to the face of our statement of cash flows here, 343,080 rands, and that provides us with our first figure for the face of our statement of cash flows. Just a little bit of a warning again, ladies and gents. I know that we've mentioned this last week on a few occasions. When it comes to the note here, we are adjusting for expense and income items, right? Because we are still talking about profits, not cash flows yet. So those names refer to expenses and income. But as soon as we reach the face of our statement of cash flows, it is a totally different story. Here we are only going to disclose the flows of cash, right? So just cash flows, no expenses, no income, no equity, no assets, no liabilities. All of those 5 elements belong on other financial statements. So here we are simply disclosing the flows of cash. Okay, so now if we just focus on the operations part of this operating activities section, we've got that figure there already. We know that is the cash generated from operations. So now to complete that section, we must either calculate the cash receipts from customers or the cash paid to suppliers and employees, or both. Now, the easier one of the two, the easier one is to actually go and calculate the cash receipts from customers. The reason why I'm saying it's a bit easier is in that case, you only have to go and reconstruct one account. Remember last week we said the process of reconstructing general ledger accounts is our technique in how to arrive at the cash flows. And we're going to talk about that a little bit in about 2 minutes again. When it comes to calculating cash paid to suppliers and employees, that one's slightly more complicated. And that is why we are basically leaving that for Financial Accounting 3. So you are going to do that in Financial Accounting 3, but not in Financial Accounting 2 yet. There you'll have to go and reconstruct your inventory account as well as your a creditors account as well as your various cost accounts. So it's quite a number of ledger accounts that you have to go and reconstruct in the one process of arriving at that figure. So let's go for the easy route this year. So let's go and see what is the cash receipts from customers. Now, ladies and gentlemen, you know, I always like you to take maybe a few notes, and this is probably a time to take a few notes again. Very often, in fact, almost always, a specific account on which the accrual for something takes place, and that same account is also the account where the cash flows are recorded. In other words, we may accrue something on that account. We'll give them specific names very soon. We'll accrue something on that account, and then when the flow of cash takes place, when we make a payment or when we receive a payment, then that flow of cash is then recorded on that exact same account. Now let's go and ask ourselves a few questions here, ladies and gentlemen. On which account do you accrue your credit sales? On which account do you accrue your credit sales? If you can type in the chat box, I know that you are going to credit sales. We all know we're going to credit sales, whether it's a cash sale or whether it's a credit sale, doesn't matter. If it's a cash or credit sale, we're going to credit our sales account. But the credit sales, those that you give the customer some time to pay, on which account are you going to accrue that? If you can type for me there, please. Anyone wants to take a chance there? Can you hear me? Anyone wants to say on which account do you accrue your credit sales? Accounts receivable. Thank you, Ravina. On your accounts receivable. Now, ladies and gentlemen, we accrue our sales there, right? We are going to, when we accrue the sales, we are going to credit the sales account and we are going to debit the accounts receivable, or if you wish to call it a more simple term, your debtors account. Same thing, right? Now, I know we've already basically answered this question. On which account do you record the payments that you receive from those debtors or those accounts receivable? Yes, we know we're going to debit our bank account because we receive money. But where do you record that then, the money that you've received from those customers? On which account? Besides the bank account. Gwenna, you can just copy and paste your previous answer. On which account? Also on your accounts receivables account or your debtors account. So the accrual takes place on that account, and the receipt of the cash from the customers also takes place on that account, ladies and gents. So that means if we have a look at the way that our financial statements have been drawn up, you know that it's on the accrual basis. It means all the accruals would have taken place on that account, and we can find the information in summarized form for that account from the other financial statements. The only exception being we cannot find the cash flow from the other financial statements. But now we've seen last week already, by reconstructing that ledger account on which the accrual takes place and where the payment is recorded, whether you make the payment or you receive the payment, where that is also recorded. If we can reconstruct that account in summary, that means we will be able to determine the flow of cash. So, which account do you think would be the appropriate one to go and reconstruct in this case, where we want to determine the cash receipts from customers? If you can type for me there. Which account should we now go and reconstruct? Aquena, you can again copy and paste your previous answer. It will be the accounts receivable account or your debtors account, ladies and gentlemen. Okay, so let's go and reconstruct debtors account. And then let's see if we can find the cash receipts from customers. Now we have the reconstructions as part of our workings. If we can just find it. Debtors or accounts receivable, then we've got the accounts receivable. Now, ladies and gentlemen, when it comes to the reconstruction for our ledger account, there's a certain pecking order or a certain sequence of events that I normally suggest to students. You don't have to follow it, but for me, I find it the most logical and easy way to go about it. So the way I go about it, ladies and gentlemen, I go and determine what is the very first entry that we will have on that account at the beginning of the current financial year. You can type that for me as well. What is the first item? You can see it in front of you actually. What is the first item that we will have at the beginning of the year that we would have carried down from the previous year? Someone, where are all the people that always answer? Where are you today? The opening balance, Ntando. Thank you, the opening balance. So that is the first thing that we are going to record in this process of reconstructing this ledger account. Now, my next question is, ladies and gentlemen, on which statement, it'll be on the face of a statement, on the face of which statement will we find the opening balance for accounts receivable? You can type for me again, please. Which statement are we going to look at to find that opening balance? Which statement carries our assets and liabilities? Well, if we have been given the trial balance, Raquel, but remember we haven't got a trial balance here, so we are looking not at a trial balance, we are looking at a financial, or some financial statement that has already been completed, that has been given to us. Thank you, Ntando. Yes, remember when you are going to start drafting your financial statements, then you'll start with a trial balance, right? Then you'll drop your statement of comprehensive income, and then your statement of changes in equity, and then your statement of financial position, and then your notes and so forth. But you've already done that, right? You've already done that. That is, or in the way that we play the game, it means you've already done that because you have been presented with a completed other financial statements, right? So we haven't got a trial balance, but we would have had one initially. But it's much more effective to now refer simply to those statements that we have already completed so far, right? So as Ntando says there, we're going to look at the statement of financial position. Now, to find the opening balance for the current year, ladies and gentlemen, are we going to look under the comparative column, last year's column, the comparative column, or this year's column, the current year column? If you can just type for me, where are we going to find the opening balance? 2019 or 2020 column? (2019), Raquena, thank you. Right, so that is where we're going to find it. So we are going to look at the opening balance for this year, which is the same as the closing balance for last year. Thanks, Arna. You are quite correct. Right. So let's see what was on our accounts receivable, the opening balance there for this year, 76,580. So we're going to take that to that ledger account that we are in the process of reconstructing there, the account payable. By the way, ladies and gentlemen, not account payable, accounts receivable. Here we go. So the accounts receivable, the next question we've got to ask ourselves, what kind of element does it represent, an asset or a liability, your accounts receivable? If you can type just for me, asset or liability. Accounts receivable, thank you, Ntando, is an asset, right? It's an asset. Now, being an asset, if if it is an asset, as you correctly say, would that balance then be a debit balance or a credit balance? You can type for me. Would that then represent or be represented by a debit or a credit? Thank you, Raquena. Then it would be represented by a debit balance, right? So we are going to include it on the debit side, the opening balance, 76,580. Now, ladies and gentlemen, what I normally do, or what I suggest you do, is once you've determined the very first line item that you're going to find on that account, then go and have a look at what is the very last one, and then we'll worry what comes in between. So now let's go and have a look. What is the very last one at the end of this financial year? That would be a what? You can type for me. What will be the last entry for the current financial year? It will be your closing balance, right? It will be your closing balance, ladies and gentlemen. I'm just going to type a few things here. When it comes to your closing balance for the current year, then that will represent the opening balance for the next financial year, right? So it'll be the opening balance for the next financial year, and it is still an asset. It is still an asset. Let's maybe just go find the closing balance. So we'll have to go back to our statement of financial position, accounts receivable. We see the closing balance was 70,825. 70,825. So let's go and complete that reconstruction. Now that's 70,825 at the beginning of the next financial year. Is that going to be a debit or a credit balance? Remember, it is still an asset. So when we start our next year, is that going to be a debit or a credit balance? If you can just start for me at the beginning of the next financial year. Yes. Thank you, Raquena. Yes, it is still going to be a debit balance because it is still an asset. So let's maybe just type in there balance brought down. To be bold. Don't want it to be underlined either. So balance brought down. What did we just say? 70,825. 70,825. Right. So that is the opening balance for the next year. Now, you remember last week I said you're going to wake up screaming at night and you're going to hear this little song of mine in your head. What do I always say when it comes to an opening balance? Where does it come from? It comes from the opposite side above the line. You remember my little tune from last week, right? So if you've got an opening balance and you are reconstructing an account, where does that opening balance for the next year come from? It comes from the opposite side above the line, right? So now at least we've got two entries there. We've got an opening balance at the beginning of the year. We've got an opening balance at the beginning of the next year, but the important thing is that comes from the opposite side above the line. And remember, if I mention the line, it just means where you have added your totals, right? So now we've got that as well. So we've got an opening balance, we've got a closing balance. What other transaction, I actually see it's missing there. What other transaction would have been recorded on besides bank? Let's ignore that for now. Let's ignore the bank. What other kind of transaction would also have been recorded on that accounts receivable account? If you can just type for me there, ladies and gentlemen. We have mentioned it a little bit earlier. What else is going to be recorded? In other words, accrued. What is going to be accrued on your accounts receivable account? This should be quite obvious, ladies and gents. We've mentioned that almost right at the start of this class. mentioned it last week in both classes and the class before that. What are you accruing on your sales? Thank you, Nkobile. Thank you. You are accruing the sales, ladies and gentlemen. So now we have to go and see, can we find the sales on any of the other financial statements that we have already completed? Can we find it somewhere on the other financial statements? Is it a disclosable item? Yes or no? Revenue from sales, where will you find that? It will be on in the other financial statements. Now, the answer is maybe not as easy as one might think. It will depend. If this company has got more than one category of revenue, let's say they've got 3 or 4 categories, revenue from sales and revenue from dividend income and revenue from interest income and so forth, then clearly you'll have to go and look at the note, the revenue note. If this company has disclosed it on the face of their statement of comprehensive income, then you can simply go and have a look there. So what I suggest you do, start with your statement of comprehensive income. Let's see if we can find it there. So if we go to our statement of comprehensive income, indeed there we see revenue from sales, revenue from sales. Like I say, very often you will find if there are many categories, more than 2, then there would have been a revenue note. So there they would just have said revenue. They wouldn't have mentioned sales or interest income, but there would have been a reference to a note, the note that we call the revenue note. And then you could have gone to the revenue note, and there you would have seen revenue from sales, revenue from interest income, revenue from dividend income, revenue from services rendered, revenue from royalties income, whichever type or category of revenue this company has. Right, so here we see they've only got 2 sources of revenue, one being from sales and the other one from interest income. And we've already determined last week that interest income is not part of the operations. That doesn't have to do with your dealings and wheelings with your customers or your suppliers or employees, right? So we are only interested in that one, the revenue from sales. So the revenue from sales, 1,750,000. I'm not sure how it disappeared from the reconstruction here, but let's go and fill it in. So, ladies and gentlemen, if you can just type for me there, I'm going to ask you 2 questions. Be careful now. If you are going to accrue your sales, your credit sales on that debtors or accounts receivable account, are you going to debit or credit sales? Let's start with sales, which represents the revenue or the income. Are we going to credit or debit sales? What would you say? Credit, thank you, Rakwena. We are going to credit sales. Not this time in Kobile, we are going to credit sales. Remember, the debtors owe us the money. Incomes are always credits, and sale is part of your income. It's part of revenue, which is part of income. So that means that will have to have a credit. So we're going to credit sales. And then at the same time, we are raising the debtor. People owe us money, so we are going to raise the debit in our accounts receivable account. So there we'll have to go and say sales. Sales. Did we just say what's the amount? It's more up 175,000,000. So that is our sales. I wonder if I can make that a little bit larger. That it fits in. I don't want that to be a bold. Right, ladies and gentlemen, so there we have it. Now what we have to go and do, we have to go and balance off this account. We have to go and balance off this account. So we see the larger side. Oh, now I have to find a calculator. The largest side of the 2 is the debit side. So if we add that up, let's just see what we get. There's a calculator. Fortunately, I still have one on my desk. So it's 76580 plus 1750 000, and that gives us 1826 580. And in the process of balancing off the account, what do? Once we've added up the largest side, we copy that total over to the opposite side. That's 1826 580. Okay. Ladies and gentlemen, the only thing left now is to find the balancing figure. So we've got to find a balancing figure, which means we've got to take that 1826 580 wider. 1826 580, excuse me, less that balance that we are carrying forward, so that's minus 70 825, and we see our balancing figure is 1755 755 1755 755. Right. Now, ladies and gentlemen, we have to conceptualize, what does that mean? What would that entries, or the total of those entries, what would that have represented? It would have represented every time that we receive money from our debtors, we would have debited our bank account and we would have credited the accounts receivable account, right? So in total, when we go and balance this account off, we see that the total amounts of money that we have received from our debtors during the course of the year would have been 1,755,755. Right, and that means we have got our second figure for the face of our statement of cash flows. What does that represent, ladies and gentlemen? Maybe I must just go down there again. But I also always suggest to students, as soon as you use the bank account as a contract, then you must realize that represents the flow of cash, right? That represents the flow of cash and highlight it because it is a figure that you are going to be using somewhere on the face of your statement of cash flows. And what does this represent? We've already talked through this. We've already said that represents the monies that were paid by your customers to you as a company. So if you want to give it a proper description for the face of your statement of cash flows, there we are. What does it represent? Cash receipts from customers. And now we were able to calculate it by reconstructing the debtors account. Right. So let's maybe just pause there for a few seconds. Let's see, are there any questions from your side? How to determine the cash receipts from customers. If we can just perhaps recap, we know that the approval of the sales takes place on our debtors account. We also know that the payments that we receive from our debtors take place on that same debtors account. So if we use the information that we already have in our other financial statements, we know that we've used the opening, or we got the opening and closing balance from our statement of financial position. We got the aggregate sales from our statement of comprehensive income. Then the difference between that, when we balance that off, that must represent the amounts that we have received in cash from our customers. Any questions, ladies and gents? Okay, so let's go and complete that operations section now. We've already determined that figure, the 343080, by completing the note for us. And now we've determined the cash receipts from customers. By the way, ladies and gentlemen, this is not a trick question. This is an easy question, but it is something that is quite important. When it comes to inflows of cash, we have to determine here some sort of a convention or a practice that we are going to follow. What would you say if you receive money in your business? Would you generally regard that as a good thing, a positive thing, or a bad thing, a negative thing? Just write there, good or bad for me. Money flows into positive, thank you, Nkubile. Quite right. So inflows we are going to show as positives. And outflows of money, bad, naughty thing. We don't want too many outflows, right? So outflows of cash from our business we are going to see as negatives, right? So clearly when we receive cash from our customers, we indicate that as a positive. It's a good thing. So now to determine the cash paid to suppliers and employees, we simply take the difference between the two, right? So it's going to be that 1,755,755 rands minus the 1,412,675 rands. That then gives us 343,080 rands. And we already know, we've discussed this now on a few occasions. We also calculated this when we did the note. That represents cash generated from operations, right? But there are maximum of 5 other possible items which we regard as operating activities, but not part of your operations. So let's maybe just go through that complete list again. There are 4 out of the 5 possibilities in this question, but just for the sake of completeness, the 5 possibilities are interest received. And remember, now we're talking cash flows. Now we're not talking income and expenses anymore, right? When we did the note, we adjusted for income and expenses, but now we're not adjusting for income and expenses. We are disclosing actual cash flows, right? So it's not going to be interest income that we disclose here, it's interest received. Anyway, so that indicates the flow of cash, right? What we actually receive in our bank, not what we've accrued. So the 5 possibilities are interest received, interest paid, dividends received, dividends paid, and income tax paid. So those are the 5 possibilities. Now, ladies and gentlemen, the way we go about this, again, there are many ways actually. There are probably quite a number of ways in which you can go about it. But the way I suggest you go about it, I like to take things slowly, one step at a time. It works for me. So what I suggest here, what we do is, first of all, we are going to determine which income or which expense is closely related to this particular cash flow. And remember, we have already memorized the structure of the cash flow, right? If you haven't memorized it yet, then you're going to have difficulties, right? So we already know the 5 possibilities. So let's maybe start with interest received. Interest received, ladies and gentlemen. Interest received, which income will be closely related to interest received? What do we call that income? If you can just type that for me, please. What do we call the kind of income that is closely related to the cash flow we call interest received? Interest income. Thank you, Ntando. Interest income. Yes. So, ladies and gentlemen, if we want to go and see whether this company had any interest income, on which statement are we going to search for it? If you put it up there, you can even use the abbreviations in the chat box. On which statement are we going to search for an item called interest income? Statement of, where do you find your incomes and expenses? Comprehensive income. Thank you, Ntando. Right. So we are going to scrutinize or look at our statement of comprehensive income. determine, first of all, whether this company had, in fact, any interest income. Because it is not impossible, but it is unlikely that they will have interest received if they had no interest income. Why I say it's not impossible is it could be that there was accrued interest at the beginning of the year that you received during the course of this year, so that you may have no interest income, but you still received some interest income that related to the previous year. But we will not in financial accounting to give you such an extreme example, but just be aware that it's not impossible. But in our case, if there is anything received or paid, we should have a corresponding expense or income. So now we go and we navigate to our statement of comprehensive income, and we look for an income item called interest income. That's too far. There we go. Do we see anything called interest income? Well, there it sits, right? Revenue from interest income. So we know that this company had interest income this year of 1,600 rands. Okay, ladies and gentlemen, that's a good start, but that is not the end of the story yet. That we now know is our interest income that we have accrued during the course of the year. But now we've still got to determine whether that is actually the interest that we have received in our bank account during the course of the year. So in order to do that, and again, yeah, good idea to write down a few notes, ladies and gentlemen. So hopefully you've still got your pen or pencil, notebook handy there. The next step, what we have to do, ladies and gentlemen, we have to go and scrutinize our statement of financial position. So we'll have to scrutinize our current assets or our current liabilities, or preferably both. In fact, definitely both. And we have to go and determine whether there was any interest income accrued at the beginning of the year, or whether there was any interest income accrued at the end of the year, or both. Right. So that means we have to go and look at our statement of financial position. So we go to our current assets, ladies and gentlemen. We see there's accounts receivable, excuse me, but no other receivables. We've got inventory, and we've got current tax refundable, and we've got a bank account and so forth. So is there any indication that there was interest income accrued at the beginning of the year? If we look at the current assets, yes or no? You can type for me, please, yes or no. Any indication of any interest? No, thank you. No. So no. Right. Now, it's very unlikely that interest income would have been accrued under your current liabilities. It would have been a current asset. But just to make sure, let's maybe just go and have a look at our current liabilities. There we see we've got accounts receivable, accounts payable. We've got no other payables except these that are specifically mentioned, namely the current tax payable, income tax, a short-term loan, shareholders, ladies and gents. So those are there. So do we have any indication at the beginning or end of the year whether there has been any interest income accrued? You can just maybe type for me yes or no, now that we've looked at both sides of the statement. Ntando, you can copy and paste your previous. There we go. Thank you, Ntando. No. Right, ladies and gentlemen, so what does that mean? What does it mean? It means if there has been no interest income accrued at the beginning of the year, and there had been no interest income accrued at the end of the year, it means that the total of the interest income that we have accrued this year, we've also received during the course of the year, right? So the accrual and the receipt took place during the exact same financial year. So there was no amount owing to us at the beginning of the year. There was no amount for interest income owing to us at the end of the year. So it means that complete total of income had actually been received during the course of the year, right? So now we have another figure in use. So we're going to take our revenue from interest income, and we say that that actually also, in this case, represents the cash flow. Would that be an inflow or an outflow of cash, ladies and gentlemen? You can just type for me, inflow or outflow. The interest received, it'll be an inflow. Thank you, Ntando. So being an inflow, it means we are going to show it as a positive. As we've said earlier, our convention or our agreement will be inflows negatives, inflows positives, sorry, I should say, and outflows negatives. So there we've got our next figure. So we are going to describe it now not as interest income anymore, because on the face of this statement we only disclose cash flows, right? And the amount is 1,600 rands positive, right? Okay, so let's stay with the receive part, ladies and gentlemen. The next possibility that we've got to research, if you want, that we have to investigate is, did we have any dividends received during the course of the year? Did we have any dividends received during the course of the year? Okay, if you can just type again there for me, on which statement are we going to search for such an income? Income called dividend income. Which statement are we going to search for it? Statement of comprehensive income. Thank you, Mrs. Moore. Right, that is where all your income and expenses will reside. So again, we are going to have a look at our statement of comprehensive income, or you might have to go and look at the note, the revenue note, which they would have provided for us there. So if we have a look at this statement of comprehensive income, we see we haven't got a revenue note, but they've disclosed there the types of revenue. Do we have any dividend income there? Do we have any dividend income there? Yes or no? Thank you, Ntando. Again, the answer is no. We have no dividend income there. So it is highly unlikely that we would have received any dividends either. But just like was the case with interest income, it is not impossible. It is not impossible. We could have had dividends owing to us at the beginning of the year, which we only received during the course of the year. So just to make 100% sure that we didn't receive any dividends, what we then also go and do, and you've made a little note of this earlier, you now go and scrutinize your statement of financial position, specifically your current assets and your current liabilities. In this case, being possible interest dividend income, it would have been under your current assets. So do we see any item there that indicates that there were dividends owing to us? We see there's accounts receivable, but there are no other receivables other than those that are actually mentioned there, the current tax refundable, the only other one. So that means there's no indication that there was any dividend owing to us at the beginning of the year, right? So if there had been no dividends owing to us at the beginning of the year, and we had no dividend income during the course of the year, then it means it is impossible. Now it really is impossible. Then it is impossible that we could have received dividends, right? Then we couldn't have received dividends, so there will be no line item called dividends received, right? As you can see, it's missing. It has been omitted, not accidentally, but intentionally, because there has been no dividends received. Okay, so we've had a look at the two possibilities of incomes that we might have received during the course of the year that is part of our operating activities section, but not part of the operations. So now let's go and have a look at the three kinds of expenses that could have been either paid, well, not received, that could have been paid during the course of the year. So let's start with that one. We've already, like we said, memorized this framework, so we know that interest paid will be somewhere there. So ladies and gentlemen, the first thing, we've already now created a technique for us, haven't we? We've got a little working program. We've got a plan how to do this. So in order to determine the interest paid for the during the course of this year, our first step is we've got to go and identify a type of expense that is directly related to interest paid. We have to find an expense that is directly related to interest paid. What kind of expense are we going to search for? What is the description that we are going to search for? You can give me any one of two possible descriptions there. What is the name of that expense that we are going to search for? Financial cost in the statement of comprehensive income. Thank you, Kaylin. Wow, you've given me that answer to my next question as well. The finance cost, right? So the finance cost, or sometimes they refer to it as your interest expense. The correct way to describe it on your published financial statements would actually be financial cost, right? But sometimes you may find in a question they just still call it, if it's not published financial statements, they might still call it interest expense, right? And then my next question would have been, where will you search for it? And Kaylin already answered that. So that would be in your statement of comprehensive income. You'll remember from the beginning of the year, your finance cost is a disclosable item. So it would not have been allocated to any of your cost functions. It has to be disclosed separately, and there it sits, right? There it sits. Here we've got the finance cost, 68,134 rands, ladies and gentlemen. So, good start again, but we are not done. We're not finished with this argument, because it doesn't necessarily mean that the cost that we have accrued is going to be equal to interest that we have physically paid out of our bank account. So we still have to go through a little further procedure, and you obviously know this by now. You've taken the notes a while ago, so now you are going to scrutinize your statement of financial position, specifically your current assets, and in this case more specifically your current liabilities. Right, so what are we looking for? We are looking for interest accrued or accrued expenses, something like that, at the beginning of the year or the end of the year. If I say beginning of the year, I mean in our comparative column. If I say at the end of the year, the current year column, right? So at the beginning of the year will be the 2019 column. That column, 2019 column, at the end of the year will be the 2020 column. So, ladies and gentlemen, do we see any mention of interest expense that was accrued at the end of the year or at the beginning of the year? Those would have been under current liabilities, just in different columns. Yes or no? Is there any indication of any accrued interest expense? Here, Mrs. Moore has actually exactly described what I was going to say next. Right, so we see there's no accrued interest expense at the beginning of the year or at the end of the year. So exactly as Mrs. Moore has typed for you there, that means the whole interest expense was actually paid during the same financial year, this financial year, right? No accrual at the beginning, no accrual at the end, means the whole expense had been paid during the course of the year. So now we can take that figure for the finance cost, 68,134 rands, and we can go and include it in our statement of cash flows. But now remember, we're not calling it finance cost anymore, because we are not indicating expenses or incomes on the face of our statement of cash flows. What are we disclosing? We are disclosing cash flows, right? Disclosing cash flows. Right, let's go to the next one, ladies and gents. We've covered the interest paid, we've covered the interest received, we've covered the possibility of dividends received. So now we have to go and look at dividends paid, ladies and gents. Now, this is a little bit of a tricky one, because there is not an actual expense that is directly related to dividends paid. It is actually something else. It is almost an expense, but it is not a true expense. So when it comes to dividends paid, which kind of transaction will be closely related to dividends paid, ladies and gentlemen? If you can type for me in the chat box, which kind of transaction would be closely related to dividends paid? What do we call that kind of transaction? This one we won't find in the statement of comprehensive income because it's not actually an expense. When we found the name for it, we'll see in which statement we will find that. So which kind of transaction is directly related to the cash flow called dividends paid? Does anybody want to type it for me there? You are both very close, Rakwena and Nkubile, but not 100% correct. Remember, as soon as you use the word shareholders, then you are referring to a liability. So be careful of that, right? I know you're on the right track, but you're not quite on the train yet, right? So as soon as you use the term shareholders for dividends or shareholders, that indicates a liability. What we are looking for now is not the liability. We are going to use that a little later on. But what we are looking for now is the actual distribution. The actual distribution to the shareholders, right? So we are looking for the distribution to the shareholders. And what do we call that distribution? Rakwena has used the word there, but he or she used shareholders as well. So we're just looking for what? Hey, Mrs. Moore has given you the answer. What do we call those distributions to our equity participants or shareholders? Dividends declared, right? The dividends declared. So now, thank you, Rakwena. So we are going to be looking for dividends declared. Now we've seen, and we've said just now, that is not an expense. So we're not going to find that on the face of our statement of comprehensive income, but it is a distribution of our retained earnings. So if it's the distribution of our retained earnings, in which statement will we find that distribution of dividends? Which statement, if you can type for me there? This statement of cash flow really tests your accounting skills, doesn't it? All round. So which statement? Yes, Mrs. Moore is prompting you there. Which statement? Where do you find the distribution of dividends? In other words, where they are paying out or they are distributing some equity? Yes. What of equity? Then Ntando good and Kubile, but Ntando even better, changes in equity. Remember, that statement is not just a summary of your opening and closing balances, it's a whole reconciliation which includes the changes in equity during the course of the year. So quite correct. So we have to go and look at our statement of changes in equity to determine whether we actually have dividends declared. Because remember again, if we didn't declare any dividends, then it is highly unlikely that we would have paid dividends either. Again, it's not impossible, but it's highly unlikely. So let's go to our statement of changes in equity. There we go. Do we have any dividends that have been declared, ladies and gentlemen? There they are. We've got two kinds, in fact. They say their ordinary dividends declared 112,500 and preference dividends declared 12,500. So if we add that up, 12 plus 12 is 24 plus 500. So that gives us 125,000 rands. So we have declared dividends of 225,000. But now we've got to go and remember the next step. We're not quite there yet. We now have only determined that, yes, we probably do have dividends paid, right? Because we've declared them, there's a high likelihood that we will pay dividends as well. But remember, that amount is still what we have accrued, what we may still owe to our shareholders at the beginning or the end of the year. So we still got to go through that further step, and that further step is to go and scrutinize our statement of financial position. So let's go and scrutinize our statement of financial position. Is there any accrued amounts for dividends payable at the beginning or the end of this financial year? Clearly, it won't be under our current assets. It would be under our current liabilities. So let me get your opinions there, ladies and gents. Yes or no? Were there any accrued amounts owing to our shareholders at the beginning or the end of the year? Just like we did with the other income and the other expenses. We've got to ask the same question. Do we owe our shareholders money at the beginning of the year? Yes or no? Just look at the last year column. Yes, thank you, Bakwena. We owed them. Thank you, Nkubile. We owed them 62,500 at the beginning of the year. Do we owe them any monies for dividends at the end of this year? Yes or no? At the end of this year, so now we've got to look at the current year column, the 2020 column. Yes or no? Is there an amount for owing to shareholders at the end of the year in the 2020 column? Yes, thank you, Nkabile. Thank you, Ntando. Yes, there's also an amount. It's a different amount, right? So at the beginning of the year, we owed them 62,500 rands, and at the end of the year, we owed them 75,000 rands. And we've seen that we've made a declaration of dividends during the course of the year, probably towards the end of the year, because we haven't paid all of it yet. So that means we would have paid some dividends. So we will have an item called dividends paid. Now, ladies and gentlemen, as soon as we see that there was an accrual at the beginning of the year, or there was an accrual at the end of the year, or both, like it is in this case, it means we have to follow that technique that we have designed for ourselves over the last couple of weeks by reconstructing the ledger account, right? By reconstructing the ledger account. Which ledger account? We spoke about this when we did debtors. The ledger account that we have to go and reconstruct is the ledger account on which the accrual would have taken place. Because the ledger account on which the accrual would have taken place is also the same ledger account where the flow of cash would have been recorded, right? So you are going to record the accrual on the same account as where you are eventually going to record the flow of cash as well. So what would that account be, ladies and gentlemen? What would we call that account? We mentioned this earlier. Two of you actually mentioned that earlier. That liability. What is that liability called? Liability towards our shareholders, right? We also see there's a little asterisk, and the asterisks indicate that the amount represents dividends owed to the ordinary and preference shareholders, but we can do them combined here, right? So that is the amount owed to our shareholders. Thank you there, Mrs. Worth. Thank you, Nkobile. Quite right, the shareholders for dividends, right? So that indicates the liability. Okay, so that means that is the account that we have to go and reconstruct. So, ladies and gentlemen, when we are going to reconstruct that account, let us just get the format correct. Let us get our structure, our frame correct. At the beginning of the year, we see it had an opening balance of 62,500. Now, I'm going to ask you a very easy little question. What kind of element is that? Is it an asset or a liability? Type for me, please. Is that an asset or a liability? There are two ways that you can look at it. We owe the shareholders. Thank you, Mrs. Smith. Right. We owe the shareholders money, so that's got to be a liability. And the other way, which is a giveaway, is it is actually under the heading called current liabilities. Okay, so if it's under your heading current liabilities, it should be a liability, right? And we know it represents monies owing to our shareholders, so it also indicates that it's a liability. So if it's a liability, ladies and gentlemen, what kind of balance will the opening balance be? A debit or a credit? Thank you, Ntando. Thank you, Nkubile. Yes, then it will be a credit balance, right? So our opening balance is going to be a credit balance. And like I said earlier, the way I recommend it is you do your very first line item at the beginning of the year first, then you do your very last item at the end of the year next, and then you go and see what would have happened during the course of the year. So we see that our opening balance would have been 62,500, and we've already determined that it is credit balance. And we now also see that at the end of the year, we had a credit balance of 75,000. So let's go and reconstruct that account. So we're going to our workings. Our workings, by the way, you'll be provided with a blank sheet in your exams, a blank sheet with these little accounts, so that you can use them to do your reconstruction. Okay, so the one that I'm looking for, oh, I just now see that there's a debtors reconciliation, which I missed somehow. I thought it couldn't have just disappeared, but now we've got two of them. Now we've got one there, and we've got one up there. I just simply missed it. Okay, so we are now looking for our shareholders. So let's have a look. Let's have a look. Where are our shareholders? Here. We've got our ordinary and preference shareholders. In reality, they would have been two different accounts, but we might as well combine them. This is just for our personal calculations, right? So, ladies and gentlemen, our opening balance, as we've seen, is 62,500 rands, and it is a credit balance because this is a liability. So that is the first item that we go and write down there. Then, like I say, do the same with the next year. You see the next year, in our current year column, we see the opening balance for the next year is 75,000. It is still a liability, so therefore it is still a credit balance. And now you can sing my little song together with me. Where does it come from? Sing along, sing along, sing along from the opposite side, above the line, right? So that balance that you've brought down comes from the opposite side above the line, right? That is then represented by a balance that you are carrying forward, carrying down, if you wish, right? So now we've got an opening balance and we've got a closing balance. So now we've just got to go and figure out what could have happened on that account during the course of the year. Ladies and gentlemen, it isn't actually that hard. To be honest, let me just give you an example. When it comes to any of these accounts, there are a limited number of kinds of transactions that you can record on these accounts during the course of the year. It's finite, right? A limited number of transactions. I'm now just going to give you a crazy few examples. For instance, can you go and record your sales on your shareholders account? Yes or no? Just type for me there, ladies and gentlemen. We're just playing a game. No, no, thank you, Ntando. No, Nkubile. Can you go and record your purchases on your shareholders account? Yes or no? Again, no, thank you, Ntando. Thank you, Nkubile. Can you record your water and electricity expense on your shareholders account? Thank you, Ntando. Thank you, Nkubile. Okay, I think that's enough. You get the idea, right? So there are many kinds of transactions that it is totally impossible to go and record on that account. So there's only a limited number of possibilities. In fact, in the case of this account, there are only two kinds of transactions that you will ever record on this particular account. What are those two transactions, ladies and gents? What are those two transactions? If you can, I know this is a little bit longer, but maybe you can just type for me. What are the two transactions that could possibly have been recorded on that account during the course of the year? We've discussed both of them briefly already. Hey, Mrs. Moore gives you a hint. Mrs. Moore gives you a hint there. We owe our shareholders more each time we declare a dividend. So what is the one kind of transaction that you will record on that account therefore? Is the dividend. That was right. As Mrs. Moore said, that increases the amount you owe to your shareholders. So you are going to increase the liability on that account. Remember that shareholders account is a liability account. So therefore, if you declare dividends anytime during the course of the year, you are going to accrue it there. You are going to, first of all, you are going to record the distribution, the dividend declared, and at the same time, you are going to raise your liability towards your shareholders, ladies and gentlemen. So that is the one kind of transactions, the dividends declared, right? The dividends declared. That is the one that we can, or that we will record on that account, because when we are distributing the dividends, we are raising the liability towards our shareholders. We can go and see whether we can find a figure for that now. Let's just maybe, before we do that, talk about what is the second possibility. What is the other kind of transaction that you could record during the course of a year on this particular account? You can type that for me there, ladies and gents. Then what happens? You now have the one occurrence where you declare dividends. What is the other occurrence or happening or thing that can take place that will require a further entry? Mrs. Moore gives you a good hint there again. When we pay some of those dividends over to the shareholders, then clearly, ladies and gents, the money leaves our bank account. So when we make payment for those dividends which we owe to our shareholders, money will leave our bank account. It means we are going to credit our bank account. And at the same time, we do not owe that amount to our shareholders anymore. So that means we have to go and reduce the liability towards them. So that is the second kind of transaction that we can have there. So that means if we make a payment, we're going to credit our bank account, and we no longer owe that amount to our shareholders, so we are going to debit the shareholders account, right, with the amount that we are going to pay them. But we don't know what that amount is yet. At this stage, we only have an opening and a closing balance. So, ladies and gentlemen, from mathematics, you know that if you have two unknown quantities, right, then you need two equations to solve it. But we haven't got two equations. We've only got this one ledger account. A ledger account is basically a mathematical equation, because your debits have to balance with your credits. A ledger account, in principle, is a mathematical equation. Okay, so if you want to solve an unknown quantity, and you've only got one equation or one ledger account, it means you can only have one missing piece of the puzzle. Now we've still got two pieces of this puzzle missing, but we do know that we can find one of the missing pieces of this puzzle in our other financial statements. Which one? That one. The dividends declared, right? The dividends that have been declared, we can find in our other financial statements. So that provides us with the missing piece of the puzzle, so that only one little piece is still unknown, and then we can go and determine, we can go and quantify it by simply balancing off this account. So, ladies and gentlemen, that figure, that dividends, where will we find it? If you can just type for me. I know you've done it earlier, but let's see if you remember it still. Which statement are we going to find the dividends declared? Remember, it's a distribution of retained earnings, and retained earnings is equity. So which statement are we going to search for that in? Changes in equity. Thank you, Ntando. Right. So here we go back. See. Yes, and Mrs. Moore confirms that. So we go back to our statement of changes in equity. You can find it there. We've seen ordinary dividends declared was 112,500. Preference dividends declared 12,500. We've added those two together in our head summa, and we know that's 125,000 rand. Right. So now we are going to record it in our ledger. Which account? The shareholders account. The way that it would have been done during the course of the year when we recorded that distribution. So what would we have done? We would have debited, what was it? Ordinary dividends was, I think, 125,500, and we would have debited preference dividends with 12,500. We would have credited the ordinary shareholders was 112,500, and we would have credited the preference shareholders with 12,500. So it means if we combine those two, we would have raised the liability towards all our shareholders of 125,000 rands. Which account would we have debited? In this case, two accounts, the ordinary dividends as well as the preference dividends accounts. Right. Okay, ladies and gentlemen, now we've got three pieces of the four possibilities of this puzzle. We've got an opening balance, we've got a closing balance, we've got the figure for the dividends that were declared during the course of the year. So now it's just a matter of balancing off this account. So we go and have a look which side is the largest side. We see the largest side is credit side. So we add up the 62,500 plus 125,000. That gives us 187,500. Right? We copy that total over to the opposite side. And we see what is our balancing figure, 157,500 less 75,000. So that gives us that figure. Right. We've already conceptualized what is the contra account in bank, and because it's bank, we highlight it for ourselves because we know that is going to represent the flow of cash. Right. So now we've got a further figure that we can go and use on the face of our statement of cash flows. And how are we going to describe it? What have we done? What does that 112,500 represent, ladies and gents? What have we done? We have paid out dividends, right? So we have the description, dividends paid. Dividends paid. Remember, this is not declared now. The amount that we declared during the course of this year was 125. But how much did we actually pay them? Remember, our amount owing to them at the beginning of the year was less than at the end of the year, so we definitely did not pay the full 125,000. And by reconstructing that account, we have determined the balancing figure is 112,500 rands. Okay, ladies and gents, so far so good. Just one little question there. Inflow or outflow? Out for me, inflow or outflow? Outflow. Thank you, Ntando. Thank you, Nkobila. It is an outflow, right? Thank you, Rakwena. There are again many ways in which you can determine whether it's an outflow or inflow. The easiest way probably is just to say, what are we describing it as? We are describing it as something paid, dividends paid, right? And if something has been paid, it means it's an outflow, right? That's the easiest way. The other way that you can go about it is to see what did you do with your bank account. Let's just go to that reconstruction. Did you debit or credit your bank account? You debited shareholders, so it means you credited your bank account. And as Mr. Borman also indicated in a previous class, if you credit your bank account, it means money flows out of the bank account. So that again indicates it's an outflow. Okay, ladies and gents, so far so good. We've got one more item there. Yes, there you can see Mrs. Moore clearly states there you have to use on the face of your statement of cash flows the word paid and received because it indicates the flow of cash, and also those that must be shown as positives, right? If you show it as a negative, no mark. If it should be shown as a negative and you show it as a positive, again, no mark, because that means you are parroting this statement. You do not understand the statement, and we want you to understand the statement. Okay, let's take a breather there. Any questions from your side? Okay, let's go to the fifth and final possibility, income tax paid. Like we said earlier, we must know what those 5 possibilities are, otherwise we're not going to even know what to search for, right? So we have to first of all memorize that. So the one here amongst the other operating activities or operating activities that's not part of operations, we've still got that one. So let's go through the same process, ladies and gentlemen. We've created a game plan for us, right? We've got a structure, we've got a method or a technique which we use. So let's first of all ask, like we did with all the others, first of all, income tax paid, to which expense would that be closely related? You can type for me there, ladies and gents, which expense would that be closely related to? For income tax paid, that would be closely related to an expense you call what? More obvious than you think. It's in fact very obvious. Come on, Mrs. Moore, prompts you again. What do you call that expense, ladies and gents? Come on, I agree with Mrs. Moore. This is very obvious. You find on Kabila, be careful. Current, what does the word payable indicate? What does the word payable indicate? Kubile, I want you to type for me because I'm sure you see now. Kubile, what does the word payable indicate? It indicates it's a liability. No, it indicates it's a liability in Kubile. So if you talk about payable, it's a liability that we find in our statement of financial position. Era Quena, you've got it right, spot on. Taxation expense or income tax expense, right? So Kubile, I think you've learned something today, right? Which is a good thing. So when we say payable, it refers to a liability. We are searching for an expense. So we are going to look, because this is called the income tax paid cash flow, we are going to look for an expense called income tax expense. So, ladies and gentlemen, we already know from the beginning of the year, it is a disclosable item. We find it on the face of which statement? Pay a bill is in our statement of financial position, but the expense, in which statement do we find the expense? Please type for me there. Which statement on the face of your statement of comprehensive income? Thank you, Ntando. There we go. So that means we are going to search on that statement. So if we go to our statement of comprehensive income, let's go and have a look. It's a disclosable item, so it should be on the face of this statement. So there we've got it, ladies and gentlemen. Income tax expense. Income tax expense. And we see that the expense that we've accrued while drawing up these financial statements was an income tax expense of 88,944. That's again a good start, but we're not there yet. Remember, as we've said so many times, that was an accrual. So we calculated that on the accrual basis. That is not necessarily what we have paid. So we have to go and determine what, ladies and gents, we have to go and scrutinize our statement of financial position. We have to go and scrutinize our statement of financial position to see what? To see whether we have accrued any income tax expense at the beginning of the year or at the end of the year or both. Beginning of the year or end of the year or both. Now, in the case of current tax, ladies and gentlemen, this is one where we have to be a little bit careful, because normally when we look at that could have been accrued, we will search under current assets. Normally, when we look at expenses that would have been accrued, we will look under current liabilities. But in the case of your current tax, whether it's income tax or whether it's sales tax, not sales tax anymore, value-added tax, it is possible that the revenue service could owe you money at the end of one of the 2 years, and that you could owe them money at the end of one of those 2 years. So here we've actually got exactly that situation. We see here last year, if we look at the 2019 column, last year under our current assets, we had a balance of 3,220 rands. That means, ladies and gentlemen, the revenue service owed us. We probably made an overpayment of our provisional tax payments, and these cash flows, tax paid, will basically represent your provisional tax payments, your first provisional tax payment, your second provisional tax payment, and any top-up payments that was required. Anyway, the fact is that was current tax refundable at the beginning of the year, so the revenue service owed you 3,220. That's why it is under the current assets. At the end of this year, the opposite applies. At the end of this year, where is that? We see no balance at the beginning of the year because they owed us money, but at the end of this year, we owe them money, right? So we've made an underpayment at the end of this year. Last year, we made an overpayment. Okay, so that means we have got an amount owing to us by the revenue service for income tax at the beginning of the year, and amount owing to them. Right, ladies and gentlemen, now, as soon as we have determined that there is such an expense, and as soon as we have determined that there was an accrual, either at the beginning of the year, or at the end of the year, or both, that means we have to go and reconstruct that account. Right, we have to go and reconstruct the account. Which account? The one that contains the current tax payable or refundable or receivable, if you wish. Right, got to reconstruct that. Now, ladies and gentlemen, in reconstructing that, we see that the opening balance was in our comparative column, 2019 column, was 3,220 rands, and that is under assets because the revenue service owed us the money. So will we indicate that opening balance as a debit balance or a credit balance? You can just type for me there, please, debit or credit balance. They owe us at the beginning of the year. Asset, so it's an asset, right? So that means, ladies and gentlemen, Mrs. Moore has given you the clue there. So if it's an asset, what kind of opening balance will it have? Debit or credit? Debit, thank you, Nkobile. Perfect. It will then be a debit, right? That will be debit. So we must remember at the beginning of the year, it was a debit balance. But now let's go and look at the end of the current financial year. At the end of the current financial year, they didn't owe us money anymore, but we owed them money. We owed the revenue service money, 6,444,000. So, ladies and gentlemen, when we start with the opening balance for the next year, would that then be a debit or a credit balance? If you can type for me then, would that for the next year be a debit or a credit? Credit, thank you, Ntando, right? Because now it is a liability, right? Thank you, Nkobile. Thank you, Ntando. Spot on. Right, so let's go and reconstruct that. Like I always say, it's very handy just to go and do the structure of the ledger account. So in other words, we're going to do the very first item at the beginning of the year, then the very last item at the end of the year, and we're going to see what could have happened on that account during the course of the year. Okay, so we've got an opening balance for this year, debit of 3220, and we've got a closing, or let's put it as an opening balance for the next year, a credit of 6444. So let's go and find that account. Let's go and reconstruct it. There we've got an account called current tax payable or refundable, depending on the balance, or income tax. Right, so let's do our opening and closing balances first. So we see that at the beginning of the year, it was under our current assets. So therefore, the revenue service owed us money. So that means our opening balance would have been a debit, right? But now the following year, we see that we actually owed money to the revenue service, right? We owed money to the revenue service. So at the beginning of the next year, what kind of a balance would that be? At the beginning of the next year, it's going to be a credit balance because now we owe money to the revenue service. So let's type it in there. Balance brought down or balance brought forward. What was the amount? Oops. What was the amount that we brought forward? 3220. Amount of 3,220. So in the next year, our opening balance is a credit of 3,220. And now we're going to sing my little song. If you want to join in, sing it with me. Where does that opening balance come from? It comes from the opposite side above the line, right? Where does that come from? When we balance off the account, where does it come from? It comes from the opposite side above the line. So now we copy that over, the balance brought down, and we say that would have been at the end of the year when we balanced off this account. That would have been a balance brought down, carried down. Let me just change that. There we go, carried down. Not 3227. What is the amount? 6444. My apologies, ladies and gentlemen. I don't see so well. Let me just go and double check that. Was that 6444? Why does that not ring a bell? Oh yeah, it indeed it was. I'm sorry, I forgot what the amount was. Okay, so the opening balance for the next year was 6,444. Apologies for that little hiccup. Naughty me. Where are we? So that is 6,444. 6,444. Let me just check what's up in the chat box there. Thank you, Mrs. For some reason that amount just didn't ring a bell. But anyway, it is actually there, so it must be true. So the balance brought down, the opening balance for the next year, 6,444. Where does it come from? It comes from the opposite side above the line where it was a balance carried down, right? Here it was brought down, here it was carried down, 6,444 rands. Okay, ladies and gentlemen, so now we've got an opening balance, we've got a closing balance. So now we've got to go and see what other transactions could possibly have been recorded on the account. You don't have to type answers for me. I'm just going to go through our little joke. Can you record sales on this account? No. Can you record purchases on this account? No. Can you record your internet service expense on this account? No. There are only a limited number of possibilities that can be recorded on this account. There might be many different entries, but there are only two kinds of entries that you can ever record on this account, your current tax payable income tax account. But let's go and discuss that, ladies and gentlemen. What are the two possible possible transactions that you can record there. The one is the accrual, and the other one is, oh, now I'm not, no, then I'm giving my own answers away. So you can type for me there, what are the possible transactions that you can record on your current tax payable or refundable income tax account? You can type for me there, ladies and gents. You should know this at the tips of your fingers. We did this a few months ago. What are the two possible transactions? The one where, as we've just said a few minutes ago, where you accrue the income tax expense. Where you accrue the income tax expense. Remember, when you are drawing up your financial statements after the year end, for the year end, it means you have to go and disclose an income tax expense even before you are submitting your tax return, right? So you have to go and estimate that, you have to provide for it. So the first kind of transaction is where you provide for your income tax expense. That is what we've got there. So if you provide for your income tax expense, ladies and gentlemen, how would you record that? Remember, expenses are debits. So you are going to debit your income tax expense. You are always going to debit your income tax expense. Even in some years where you have to adjust for an over provision, where you do the opposite, it is still the same kind, same category of transaction, right? But then you'll just do the opposite. So, ladies and gentlemen, in total, you will debit your income tax expense, and at the same time you are raising the liability towards the revenue service. So therefore we credit this account called current tax payable colon income tax, or current tax refundable, like it was last year. The name of the account you can just leave as current tax payable, but clearly at the end of last year where it had a debit balance, you would have disclosed it as current tax receivable or refundable because it was sitting under your current assets, right? Okay, now ladies and gentlemen, what is the other kind of transaction that we would record on this account? If you can tell me, I almost gave it away. What is the other kind of transaction besides providing for an income tax expense? To do what to the revenue service? Every time you do a first provisional or a second provisional or a top-up, payments, the actual payments to the revenue service, right? So if we make payments to the revenue service, how are we going to record that? Ladies and gents, anytime we make a payment, it means we're going to credit our bank account, right? Because money flows out of our bank account. And which account will we then debit, ladies and gentlemen? We've already provided, accrued the expense there. In other words, we raised the liability. But if we make a payment, a first provisional tax payment or a second provisional tax payment, which is probably what these represent, or a top-up payment for the last year, it means we are going to debit the current tax payable account. Right. So the two transactions are accruing the income tax expense at the end of the year, and then every time you make a payment to the revenue service, whether it's top-up payments or provisional tax payments, those are the other kinds, right? So if you accrue the expense, you debit the expense, you raise the liability in this account. When you make payment to the revenue service, you credit your bank account and you debit this liability account, right? And as we've said, as soon as the bank is our contra account, we are going to highlight it because that represents the flow of cash. So that is an amount that we are going to use in our statement, on the face of our statement of cash flows. Okay, but at this point in time, we have two unknown quantities. We've only got an opening balance and a closing balance. So we must go and find one of the other two possibilities. We know that our other financial statements have been drawn up using the accrual system, so we're definitely not going to find the cash flow. but perhaps we can find the income tax expense. And as we've seen a little bit earlier, ladies and gents, yes, we can find it on the face of which statement? The statement of comprehensive income. Right, so on the face of our statement of comprehensive income, we've got an item there, the income tax expense, 88,944,000. So that is the expense that we would have accrued. So we can fill in that missing piece of the puzzle. It is no longer missing. Right, so we can put in that figure there. We would have debited income tax expense 88,944. We would have credited that account. Now the only one that is outstanding is the cash flow, the one that the bank is the contra account. And we can determine that by balancing off this account. So let's go and balance off that account, right? Let's go and balance off that account. The largest side we see is the credit side. So we add that up. That gives us 88,944. Copy that total over to the opposite side, 88,944. We deduct the opening, we've got the opening balance of 3220 and the closing balance of 6444. And we see that our balancing is 79,280, right? So that is the balancing amount when we balance off the account, right? So that is a cash flow. And how are we going to describe it? We now know that represents our income tax paid. Income tax paid, the amounts that we have actually paid to the revenue service, so they would have been coming out of our bank account. Okay, 79,280. So now we can go to our statement of cash flows. We can go and describe the income tax paid, an amount of 79,280. Again, we can ask the question. This is very important, ladies and gentlemen, because we have to know whether to show it as a positive or a negative. Is it an inflow or an outflow of cash? It is time for you to type something for me again. Inflow or outflow of cash? Outflow. Thank you, Ntando. It is an outflow. How do we know that? Again, there are two ways in which you can determine that. First of all, the description is something paid, income tax paid, right? So therefore, it will be money leaving our bank account. The other way that you could have done it is you could have had a look at the account that you've just reconstructed, and you would have seen that for those payments, we would have debited this current tax payable account and we would have credited bank, right? So as soon as we credit the bank account, we also know it is an outflow. It is an outflow of cash. Okay, ladies and gents, we are done. We've looked at our operations. We have looked at the 5 possible other operating activities, which means we are now done with this section. The section that is called cash flows from operating activities. However, there's one small little thing that we still have to do. We've got to give it a subtotal. We've got to now give a subtotal to that overall section, the cash flows from operating activities. How do we do that? That is going to be our cash generated from operations plus any positive figure amongst this group minus any negative figure amongst this group of figures. That will then give us the subtotal, right? The subtotal, so that indicates that we had a net cash inflow from our operating activities. Okay, ladies and gents, that completes the operating activities part, the operations as well as the other items which are considered to be part of operating activities but not of operations. Any questions from your side? Let us just pause for a few seconds. Unless there are questions, then we can pause for many minutes. Doesn't seem to be any. Okay, so now let's go to our next kind of activity, which is the investing activities. Ladies and gents, yeah, we are running out of time. I'll have to hurry up. I'm sorry about that. excuse me, when it comes to your investing activities, if you can just type in the chat box for me, your investing activities has got to do with what? It has to do with one kind of thing. I'm sorry that I use the word thing, but it has to do with only one kind of, I can't call it an element, just one kind of thing. Let me just call it that. What does your investing activities have to do with? It is items that you find where. Let me maybe say, where do you find those items? In which statement, first of all? That it has to do with. We find it in our statement of financial position. Where? Ladies and gentlemen, thank you, Raquena. Yes, our statement of financial position. And if you don't already know this, let me tell you, investing activities has to do with your non-current assets. So if you can make a note there, ladies and gentlemen, it has to do with your non-current assets. Now, we've seen at the beginning of the year, we normally distinguish between 5 kinds of non-current assets, 5 overall categories. So I'm just going to talk through them or list them if I can remember all of them, and then we'll see which of those we have. So your investing activities deal with your non-current assets. And the categories of non-current assets that IAS 1 basically distinguishes are property, plant and equipment, financial assets, intangible assets, investment property, and biological assets. Right, so those are the 5 overall categories that IAS 1 advises for us. Right, property, plant and equipment, financial assets, intangible assets, investment property, and biological assets. Remember, we joked about the biological assets at the beginning of the year. They are living assets such as your vineyards or your cows or your sheep. If you are a wine farmer, wine farming company, then your vineyards would be your biological assets. If you're a milk company, Dairy Bell, then the cows would be your biological assets and so forth. If you are a wool farmer, wool farming company, then the sheep which you share will be your biological assets. Anyway, I'm talking too much, right? Running out of time. Okay, so the fact is, ladies and gentlemen, when it comes to your investing activities, it deals with your non-current assets. It deals with your non-current assets. Okay, now fortunately, when we did our note to the statement of cash flows, we have covered some of these already. Let's maybe just see which we have covered and which we haven't covered. Now, ladies and gentlemen, when we are talking about investing activities, we only are interested in those items that we have already marked for ourselves, for our own purposes, with I's. But anything that has to do with an I. So let's maybe just start with our statement of financial position to see which categories of non-current assets we have. We see here we've got property, equipment, vehicles, and investment. So the property could be investment property, or it could be part of your property, plant, and equipment, depending on the circumstances. Your equipment and your vehicles will definitely be part of your property, plant, and equipment, and your investments will be part of your financial assets. Right, so all of them form part of your non-current assets. So now we're going to go and decide, have we actually paid for any acquisitions, or did we receive money for any proceeds on disposals of any of them? So ladies and gentlemen, we've got a few pieces of information here. We've got opening balances and we've got closing balances, but we've also got additional information. So ladies and gentlemen, let's do them one at a time. Let's do them one at a time. So let's maybe start with the property, right? The property. We see at the beginning of the year, we had a balance on our property of 1,100,000. We also see that they do not provide for depreciation property, because then we would have had an accumulated depreciation account there, which we don't. Then we also see that at the end of this current financial year, the balance on the property account is 875,000, right? So clearly there was movement. From this, purely from this, it seems there would have been a disposal. There would have been proceeds on the disposal of property. But we don't know whether there was maybe an addition, a new acquisition as well. So therefore, we also must go and have a look at our additional information. What do they tell us about property? Yeah, this bullet here, remember we've marked this with an I, we've marked that with an I, we've marked that with an I. We also marked paragraph 4 with an I. No, sorry, with an F. With an F, sorry about that. So our investments, now we're worried about the property. They say property was sold for 260,000 rands. No further sales or purchases of property were made during the year. Now, ladies and gentlemen, let me just give you the idea or the hint here. If that sentence wasn't there, if they didn't say no further sales or purchases of property were made during the year, then it means there could have been some other acquisitions or there could have been other disposals, right? That means we would then have had to go and reconstruct the property cost account, right? In this case, it doesn't, well, they assure us there were no other sales and no other purchases of property, so it was only that one disposal. But I just still want to go and make sure. They said there was only a disposal of 260,000. I still want to verify that. So just to make sure, I'm going to take my opening balance of 1,100,000 and deduct the 875,000. Did something wrong there. 1,000,000 minus 875,000. That gives me 225,000 rands, ladies and gentlemen. That gives me 225,000. What did they tell us there? Let's just have a look. They said property was sold for 260,000 rands. Now, what is happening here? I wonder if there wasn't an acquisition as well. So let's go and have a look. When it comes to the property, there must be a mistake here. That doesn't work out me. Okay, either one of those balances must be incorrect, ladies and gents. Sorry, it's the first time that I've actually checked that deduction. But the fact is, we'll have to go with the additional information. I'll have a look later on where that difference, where that discrepancy comes from. Very strange. But anyway, so we see that in our additional information, they did tell us that there were no other purchases of property, no other disposals of property. So therefore, we'll have to accept that as correct. The property was sold for 260,000. So that means that is going to be our cash flow. So let's go to our statement of cash flows. How are we going to describe this? Is this an acquisition or a proceeds from? You just type for me there. Acquisition or proceeds from? Thank you, Ntando. We have sold it, right? The balance decreased from the beginning of the year to the end of the year. So that will be that one. Where is it? Proceeds from the sale of property, 260,000. Now, being proceeds on sale, would that be an inflow or an outflow? Just type again for me. Inflow. It'll be an inflow. Thank you, Ntando. That will be an inflow. Okay, so now let's go and have a look at our next category. I think this one we've already calculated. I'll just double check that. Our next category is equipment, right? Equipment. Now you remember last week when we did the note, we reconstructed the cost account and we reconstructed the accumulated depreciation account. Let's just go and see what they tell us about equipment. This little piece of additional information. They say no equipment was sold during the year. Again, ladies and gents, I know that some of the other questions will have to do this. If they did not tell you that no equipment was sold during the year, then it means you would have had to go and reconstruct that account to see whether there was actually any disposal. So we'll still do that in another question, but in this particular question, we do not have to do that. Right. But we did reconstruct it, if I remember correctly, the equipment. Let me just go and have a look quickly. Where did we do that? The equipment at cost. There we go. If you have a look at the recording of last week's session, when we did the note to the statement of cash flows, we reconstructed this account, the accumulated depreciation, and we reconstructed this account. So basically, we started with our opening balance for this year. Then we had the opening balance for next year there. That balance came from the opposite side above the line. And you'll see from the recording, we simply went and balanced off the account, and we saw that the balancing figure was an amount of 40,000. Right. You still remember that? And Kubila, we have profit on sale of property. Yes. Remember, on the face, I know what you are referring to, but perhaps we can just discuss what you are saying. Remember the profit on sale of property. Where have we deducted that? That profit on sale of property was included in our profit before tax, right? But then because it's not part of our operations, we took it out. So that profit on sale of property, what we did last week, we deducted it, but not on the face of the statement of cash flows, but in the note. What we have to be very clear on here, in the note, we adjust for profits and losses. But on the face of this statement of cash flows, no losses, no profits, only the flow of cash. Only the flow of cash, right? So that, where was that you know, where the depreciation and the profit on disposal, where we found that. So here we must now not look for any profits or losses. Here we must look for the cash flow, right? The cash flow. In other words, where the bank is our contra account, right? And here we see that the balancing figure was 40,000 rands. Our bank account was credited. So, ladies and gentlemen, that means what does it represent? If we go to the face of our statement of cash flows, what does it represent? Oops, too far, there. That one, right? Remember, we credited our bank account, so money flowed out of our bank account. So how are we going to describe it? Acquisition of equipment, and we've just seen that the cash flow was 40,000. Right. Now let's go to our next category of non-current asset. We've looked at property. We have looked at the equipment. So now we've got to go and look at vehicles. Right. In the case of vehicles, ladies and gentlemen, we started reconstructing that account last week, and then we saw that the account wasn't even reconstructed because there was only one type of entry, namely an acquisition. So we see at the beginning of the year, it had a zero balance, as did the accumulated depreciation. So that means it could only have happened one of two things, either both an acquisition and disposal, or either just an acquisition, right? There was nothing that we could have disposed of at the beginning of the year. So let's go and have a look. What do they tell us about vehicles? They tell us nothing. Okay, so they tell us nothing in addition there with regards to vehicles, right? So if they tell us nothing with regards to vehicle, we can only assume that one kind of transaction has taken place, and that is an acquisition, right? Because we started the year with a cost on the vehicle account of zero. We ended the year with a cost on the vehicles account of 180. 28,000. So that means we have acquired a vehicle. And again, we are only going to show the cash flow. So then we're going to say acquisition of vehicle, 180,000, right? So we acquired a vehicle, it means we would have credited our bank account, money has left our bank account, so that will be an outflow. That will be an outflow. So we've got the proceeds on the sale of property, the acquisition of vehicle proceeds. No, we haven't looked at the investments yet, but we have looked at the acquisition of equipment. So now let's go and look at our next category of non-current asset. Our next category of non-current asset is investments. What's the difference between an investment and investing? There is actually a difference, ladies and gentlemen. When we speak about investments, we refer to a financial asset, right? So it'll be shares that you own in another company, or it could be a 2-year fixed deposit at a banking institution, right? So an investment is normally financial investment, whereas investing activities relate to all your non-current assets. You could have investing in property, plant and equipment. You can have investing in intangible assets. You can have investing in investments as well, the financial assets. Okay, so here we see we had an opening balance of 125,000 rands. We've got a closing balance of 185,000. So it increased by 60,000. It increased by 60,000. So let's now just go and have a look at our additional information. Do they tell us anything about that? Ladies and gentlemen, where did we mark with I's? This paragraph I, there they give us some more information. They say investments which cost 62,500 rands were sold at a profit of 625,000. Now I'm going to ask you a trick question, ladies and gentlemen. So investments which cost 62,500 were sold at a profit of 622,500. So that means, what did we sell it for? If you can type in the chat box for me, what did we therefore sell it for? I have to find my calculator again. Okay, I've calculated it. Let me just see what you've written. Chat box. Ntando, you say 2,500. Let's just think about that again. We see that investment which cost us, remember, the investment cost us 62,500, and we want to show the cash flow, right? The cash flow. So originally it cost us 62,500, but now we've sold it at a profit of 6,225. So that means, how much did we sell it for? If the cost was 62,500, we made a profit on disposal. So how much did we dispose it for? Let's see if we've got some other answers there. How much did we dispose it for? Clearly, this will be described as proceeds on disposal. So let's go and have a look. Proceeds on disposal. Where are we? Proceeds on disposal, or sale, if you wish, of investment. How did we get figure, ladies and gentlemen? The cost that was recorded on the investment at cost was 62,000. We sold it at more than that. We sold it for a profit over and above the 62,000, a profit of 6,225 rands, right? So what did we sell it for? 62,500 plus 6,225. Does that make sense? Your cost was 62,500, but you sold it for 6,225 rand more than the cost. That is why you sold it at a profit. So your selling price would be 68,725. So that we can go and fill in there. This is the proceeds on disposal or sale of the investment, 68,720. Okay, so far so good, ladies and gents. We are running out of time. I just want to complete this activities section. Then I'll just borrow maybe 15 or 20 or so minutes from Borman's time on Thursday just to complete the financing activities. But I want to go through it thoroughly, so that is why I'm taking so long. I'm sorry about that. So, ladies and gentlemen, we see that the proceeds on disposal of investments was 68,000. But now, if we go and look at that account, the cost that we have taken out, let me just go to the notes again. The cost that we have taken out was 62,500. Right. The cost that we have taken out was 62,500. But if we go and have a look, at the balances have increased from the beginning of the year to the end of the year, right? The balances have increased. So, ladies and gentlemen, there must have been an acquisition as well. There must have been an acquisition as well. Now, there are two ways in which you can go and calculate that acquisition. The best way that I would recommend is you go and reconstruct the investment at cost account. Right, go and reconstruct it. I'm going to use a little shortcut now, just to do it without reconstructing the ledger account, but it is the same kind of reasoning that you go through. So, ladies and gentlemen, when we started the year, let me put this in memory. No, I don't need that in memory. When we started the year, with a balance of 125,000. Then we had a disposal of investments with a cost of what? Disposal of investments, here we go. Disposal of investments with a cost of 62,500 Rand. So what do we need to do now to see what our balance is? We take the 125,000 opening balance. Let me just see what was the cost of the item that we've disposed of again. Minus the 62,500. That gives us a balance at this stage, coincidentally, of 62,500. Okay, so balance of 62,500. What is the closing balance at the end of the year? The closing balance at the end of the year is not 62,500. The closing balance is 185,000. So we're going to take that 185,000 minus 62, minus 185,000. Minus 185,000, that gives us 122,500. So besides the disposal of 64,500 cost, we have acquired some more investments to the value of, just calculated that to the value of 122,500, right? 122,500, right? So not only did we have the acquisition, the proceeds on the disposal of the investment, we also had an acquisition of the investment. Remember, the closing balance was bigger at the end of this year than the beginning of the year. We've just done that, just sort of a shortcut, but it is the same if you go and reconstruct the account. So if you go and reconstruct the account, ladies and gents, then you would have opened it with an opening balance. You would have started with an opening balance on the debit side of 125,000 rands. You would have had a closing balance at the end of the year of 185,000, which comes from here, from below the line. Then we've seen that the cost of disposal was 62,500, which means that your balancing figure would have been 122,500, right? So that is also going to be coming from your bank account. So that is also a cash flow. Okay, ladies and gents, I've gone over my time a bit, but at least we are done with the operating activity section. We are done with the investing section. Because why are we done with the investing activity section? Because we have covered all the non-current assets. We had a look at property and equipment and vehicles and investments. So we have looked at any possible cash inflows or outflows from them. So the only section that or two sections that we've still got to do next time, if I can just borrow some time from Mr. Woman, is just the financing activities. That's just going to take us 15 minutes or so. And then just the reconciliation, which is going to take us 5 minutes. So I just want to pinch 20 minutes next time. Okay, ladies and gents, my apologies for going over time again. Are there any questions from your side? Are there any questions from your side? No questions from your side. Okay, thank you very much, ladies and gents. Then we'll see you then on Thursday again. Thank you, Mrs. Moore. Thank you, Mr. Borman. Thank you, all the students. Thanks especially to those who provided so many answers there. Have a lovely afternoon.